We've got this handful of reports right now. Companies like Microsoft, Google, Meta are kind of quietly pulling back some of their CapEx spending that they're talking about. Estimates are still very high, but they're starting to kind of tailor those off just a little bit. We'll see kind of what happens, but AI is not that different from what we saw at this phase during the first dot-com bubble, kind of the 97, 98 period of the market. Some of the things that are going on are certainly reminiscent of that. And one of those is this recycling of money that's happening. So Oracle crashed the AI bubble party on September the 10th, and they unveiled that they're announcing a $300 billion 5-year computing deal with OpenAI. Oracle went tearing off to the races. It was up like 20% on the day. So they're doing this 5-year computing deal with OpenAI. In retrospect, Oracle has this contract. It's a future contract, future revenue with just 3 customers. Oracle also doesn't actually have the money to pay for that spending, which is now projected to last into the 2030s. And that's assuming no recession on the horizon, anything like that. So you now have vendor financing with cash from operations. That's one thing. Vendor financing with cash from debt is something totally different. And for Oracle, it's going to require debt. Now, importantly, Oracle now saying, okay, great. I'm going to do this deal with OpenAI for data centers we haven't even built yet, all based on future revenue or hopes for future revenue. So you get this kind of circular economy in artificial intelligence. You've got Oracle investing $100 billion into NVDA. NVIDIA turns around, invests $100 billion into OpenAI. OpenAI then takes that $100 billion, they invest into Oracle. And so now you've just got this circle between 3 companies, all based on future revenue, on hopes that this will all come to fruition. Let's go back to the 90s again. In the late 90s, there was this idea that the internet was going to be the game changer for everything. Everybody was going to generate tons of revenue coming off of the internet, and it was going to massively increase productivity, et cetera, so forth and so on. And so everybody was booking revenues and expectations well out into the future about all this revenue that was going to come in, and people were paying up massively for those valuations of those companies. I need to buy this today. Doesn't matter the price. Internet.com revolution. Everything's going to be tied to the internet, and it's going to be a gold mine of revenue for these companies. The internet was a game changer. It did increase productivity. It did create revenue, just not to the levels that everybody had expected it to be. There was also the dark side of productivity, which was job losses and other stuff. We're kind of in that same situation right now. Now, I want to be careful. It does not mean that the markets are about to crash. As we saw back in the late 1990s, bubbles can last a very, very long time. This is a chart of previous bubbles and how long they lasted before they eventually come to reality. And what that reality is, it's just that the expectations are now probably well beyond what companies can actually grow into.
Catch me daily on The Real Investment Show. The link is in the description.